Good day, everyone, and welcome to Admiral Markets webinar session recap. As always, standard time on Monday, and I think at the end of October we will have a new time. Basically, it will be the same as we do, but we will have a time shift. So, as I reckon, the time will go 1 hour backward. So, basically, our session recap will start around 5 p.m. GMT, but it will be the same as we do today. So, don't be confused with that time shift change. And if now it's, let's say, 6 p.m. your time, it will be still the same time, but just we need to make a time shift. I think it will be the end of October. So today I will show you euro dollar, pound dollar, Australian dollar, dollar CAD, and pound yen. Previous week was also good. We didn't have a huge amount of pips. Some trades were okay, some trades went into losses. But we also have very volatile markets, so it's not a coincidence that from time to time we might have also some losses. But anyway, we made a positive pip count, and I will show you that. But before I begin, as always, a standard risk disclaimer explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposit. So those are not suitable for everyone. This presentation and the video is for informational and educational purposes only, and have in mind that online education materials are available by Admiral Markets Estonia for a global audience. So this video is not part of the .co.uk website, but the globally used .com website. So this is me, and my favorite quote that patience is the key to trading success. Always try to be patient. Do not be impatient, because if you try to catch the market, you will never get it. Market is like the shadow. And the rules and setups for our session recap. Give price a breathing room. You can enter within 15 pips of the predicted level if it's in agreement with your system. We call it POC or buffer zone. Use scaling in if you wish, and don't forget that you do your own trade and money management. Respect your stop loss. Add the spread to your stop loss even if you trade via ECN. Don't forget to add 2 to 5 pip spread depending on the pair traded. We take only one position per listed pair, so it's either positional or alternative trade, whichever hits first. Don't forget that first touch of the zone is usually the most profitable. That is why we are focused on the first touch. Positional trades are trend trades, alternative trades are counter trend trades, and breakout trades and scalp trade levels can be traded independently of any position. So depending on time and volatility, we use profit stop after 20 pips, but not less. Session recap setups are valid for today, tomorrow, and sometimes the day after tomorrow. Also, don't forget to pay attention to my Twitter updates. And know that scalp trades, if I give you a scalp trade, it can be done at or very close to important support resistance levels. All these levels are calculated by historical levels and Camarilla, because I always take a look at historical buyers and sellers. Add these levels to your system, pay attention to trend. So if you miss my POC entry, sometimes you might find other trend-based entries. And the term pips pool, it is the maximum available number of pips you could have made on recap entries. So these are past week results. Okay, euro dollar positional trade was plus 20 or minus 50, and we had a revised setup on Wednesday for plus 40. Pound dollar positional trade was a loss, but when it hit stop loss, it went 150 pips subsequently in profit. So maybe some traders actually caught the move if they had wider stop loss. I will show you what happened, but definitely this was a good setup, but just maybe a stop loss was a bit tight. Australian dollar, good trade for 25 pips. Dollar CAD, it was either 60 or minus 40, depending where you put your stop loss. And again, the trade of the week, my favorite pair, pound yen, clear winner of the week, 100 possible pips. So the total pip count was between plus 40 and 210. And trade of the week was the pound yen. So this was euro dollar. As you can see, again, the POC zone was very, very strong, because that was the only place where euro dollar could reject after it actually made a move to the upside. And you can see from the screenshot, basically that is where we had our trade. So from this spot, it rejected, but not for much, only 20 pips. Still, the rejection was, well, as you can see, it was a side step here, and then it made a zigzag upward, and then it started to make some, let's say, range bound price movement. But from this spot, it was either plus 20 or stop loss. And here, if you watched and if you read my analysis, revised trade setup, well, it was basically either up or down, but I guess that you maybe made some money. Here also, I will show you again. Here, this was the revised setup, euro dollar, trend lines in confluence with the POC zone. So I immediately revised my setup. And if you went long from this spot, okay, here, well, then euro dollar was a pretty much good trade. So yeah, I was basically, I was watching euro dollar movement on 4-hour time frame, and here on 1-hour time frame it went in according to new trend. So that is why I made this revised setup. That was good to make some intraday pips. Pound dollar was well, as I say, it hit stop loss, then it went into profit. Very, 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 I can say a good setup, although I expected that stop loss will not be hit. But yet again, sometimes we cannot, we don't know what the market will do. Definitely, this setup was pretty much accurate, if you ask me, except for this stop loss. That was a bit tight. So we had a sell position around 32.20, and this was the sell position. But you see, a stop loss was 32.55 at 5 pip spread, let's say, to cover up some expenses and, of course, for the spread. So here it hit stop loss, and watch this. Good, good, good drop after it hit a stop loss. So pound dollar, well, for some of you, maybe was a win. For me, it was a loss. Australian dollar, this was a setup that gave us some pips, because Australian dollar is very slow moving pair, and the ATR of Australian dollar is around 60 pips. So for the last 14 days. So for this setup, it was good that we made, basically, that we can make anything out of it, because it's a pretty much slow moving pair. But well, for some traders, it's good because it's not very volatile, except when it comes to some RBA announcements. So Australian dollar was good. It was a sell position at 78.30. This was a stop loss. The stop loss was never hit, and it went into some profits after it made a side step again to the positive side. But originally it made some profits. You see why I say the first entries within the zone are usually most profitable, because this first entry in the zone was very, very good, even this one. So yeah, but in the zone, that is where we make our trades. Australian dollar CAD was again either a positive or negative, depending how big was your add-on to stop loss, because we had buy position and a sell position, but buy position was activated first, so we traded buy position. It hit our buy position, it went down, you see, well, 33.34, stop loss was 24.40. So it was probably a stop loss, although the pair actually recovered from that. Maybe if you add like 8 pips to your stop loss, then the stop loss would never been hit. Pound yen was the trade of the week again. Again, my favorite pair, and I really like this. Sorry, this pound yen. You see, pound yen was sell position 149.35. Well, the chance is that you miss this first pullback, because it was not that close to the POC zone. it came to 149.0405, and the POC zone started from 149.20. But another entry was good. So if you were patient enough, then you would have made some nice pips on pound yen. So pound yen, definitely the trade of the week. Now I want to, guys, again invite you to this great opportunity. Please do not forget to sign up. This is new series of our webinars. Okay, it's called Real Time Daily Trading Ideas. Please join up for this webinar. And yeah, I will be on Thursday, and I will give you clear setup on my favorite pair that day with clear entries, of course, stops and targets. So that will be daily trading idea. Another one, it will be very, very, very fast. So it will take like 10-15 minutes just to get you into a possible good trade. So don't forget to sign up, guys. Okay, just click here and sign up. Yeah, Albert is saying attended it this morning. It was great. Thank you, guys. I'm very glad. And Angel is also saying that he attended it. So excellent. And yes, I will definitely be very, very precise and straight to the point because I will give you my trading idea, entry, stop loss, target, how to protect your trade, basically what I also will trade. Well, I think this is an excellent, excellent way to start up your trading day. Okay, so let's get back to the webinar here, and yeah, euro dollar now. We will start with trading setups for our pairs. Yes, and one more thing, guys. I will also during yeah from previous week I started on really trading and analyzing equities and commodities too. So from now on, around approximately 2 times per week, you will also see, in addition to Forex analysis, you will see probably a commodity analysis or let's say an equity analysis. Same thing that I do with my Camarilla MACD method, and it's pretty much accurate for all markets. So yeah, you will see not just Forex, but also commodities. Previous week I gave you a great, I hope that you traded, guys. I mean, it was very, very good. It was WTI, okay, it was oil. And here, guys, my oil analysis went into profits, okay, and I hope that you made something out of it. But it will be, as I say, it's not one time only. It will be definitely a standard. Okay, so yeah, please do not forget to actually read the analysis that I post, not just Forex, but also commodities and equities, and maybe soon cryptocurrencies too. But I really need to get a knack for trading it before I start to analyze it. You know, guys, I cannot analyze something that I don't trade. It's my, well, that is my politics, because that would be a bit unfair for me, right? To give you the analysis and I don't trade it. So when I start trading cryptos, I will then start also providing you with the analysis. But I think it's a great thing that you will also see commodities and equities analysis, because those are financial markets also that I trade. Now, euro dollar. This is euro dollar setup 1730, 1680, TP 1910. Sell position 1920, stop 1970, TP 1730. So euro dollar is well, it's ranging. According to what I see, guys, this is a very, very, I can say this is a range bound market. It's not like we are having something excellent to trade or to focus our attention to. It's like I don't know. It's pretty much for me. It looks like the market is very, very, very heavily range bound. And yeah, I will show you the chart now. So here you can see euro dollar 4-hour time frame. Now it's exactly at the EMA 89. Although this SMA also it's sloping up, so you see it's very range bound market. And yeah, one of the things that I also added to my template, and that is I also added an SMA of 50, and I'm just watching the slope of that SMA 50. And if the slope is downward, the pair is having a downtrend. If slope is upward, the pair is in uptrend. But I'm also watching Camarilla levels in addition to the SMA angle. So I'm not watching any crossovers. I'm not looking at any SMA as a, let's say, entry tool. Just I'm watching the slope or the angle of the SMA compared to higher time frames and my Camarilla pivots. So yeah, by visiting these webinars training, you will see also how I use the SMA, and in addition to my standard Camarilla analysis template. So here, this is pretty much obvious that the pair is in ranging mode. A lot of buying, selling. You see, this is a sell candle, then completely negated by buy candle. Now this is a doji in progress. Let's see how the candle will close. But if it closes like a doji, then again, that is of course indecision in the market. Also, you can see here the market is trapped between monthly L1 and monthly Camarilla, so there is no clear trend. The angle of this SMA is slightly upward because it looks like it's going up, of course, but you can see that it's rejected from this resistance here. So it's a bit cluster of resistance. So not very clear market to trade at this point. But as I say, now let's zoom on to 1 hour time frame. 1 hour time frame. Well, 1730 is a possible buy position here. If the price gets around 1730, we have a lot of buying in history. Historical head and shoulders inverted pattern. You see, this is shoulder head shoulder pattern. Then a lot of buyers, low volatility zone. If you follow my price action trading school, you know this is Levez or low volatility zone. And usually in the low volatility zone, you will actually see some nice patterns forming. And well, you might expect a breakout usually from the low volatility zone. Also, guys, we are currently making a great tool that I think will be freely distributed to all Admiral Market traders, of course, from Elite Currency. And here you can see definitely this tool in action because this is what I like. This is pennants and flags tool that automatically mark all pennants and flags. And here you can see how it works. It's very useful because you don't need to mark it yourself, and it can actually provide you with some cues where the next leg, next impulse should actually go to, and maybe you can base your breakout trades on. You can use it, but it's a great tool. And here you can see the price is actually trapped. This looks, guys, now if you take a look here, this looks like a mini pole, and this looks also like some sort of pennant, right? And yeah, the only thing here is what I don't like to see is that that range bound price movement. So if you see that range bound price movement, then definitely you can trade both ways. I'm not favoring really range bound trading, but well, usually you will be able to trade both ways. Now, yes, I mean, this is also, yeah, this is pennant here, this is flag, but you see, guys, how actually it works. It's anyway, it's range bound price movement. Yes, someone asked, is this a pennant or a flag? According to me, it's basically the same. According to standard definition of forex price action and price action trading, this is a flag. This is a flag, and this is pennant. But the purpose is the same. Both flags and pennants have a flagpole. And usually when a pennant or flag is broken, we add the height of the pole to the breakout point, and that gives us targets. That is how usually traders watch these pennants and flags. So for all of you who still want to know standard definition, guys, well, basically it's all the same. You don't need to remember all these fancy names, flags and pennants. Those are all patterns that have poles, and the breakout of that geometrical pattern will give you usually an impulse move to its target. In forex market, I personally don't measure the distance between, let's say, the bottom of the flag and the breakout of the flag. I use Camarilla pivots, but some traders actually do it. Okay, so this is the flag. This green is a pennant. Okay, but you can call it however you wish, guys. So basically the price is either, you see, it will be either up or down. For me, 1730 is a buy position. Okay, sell position is 1920. So I'm still waiting for some substantial price action, because on 4-hour time frame, 1920 is where price made a gap in near-term history, and I expect this to be resisted before we see a move to the downside. So anywhere from this spot, okay, to let's say 1920, that is also an order block here. So this is level where the price should reject. Ahmed is asking about this indicator. Yeah, I mean, just wait a little bit. It's not final yet. We still need to recode it, few codes here and there, but it will be final, I think, during this or next month. Okay, here you see it's very, very, very good indicator, because it cues possible flags, pennants, triangles, and so on. Okay, let's move on to the GBP dollar now, guys. GBP dollar setup. Well, GBP dollar is now in technical uptrend. 32.10 is a buy position for me. 31.55 stop. 33.70 is TP. Alternative sell comes around 33.70. 34.10 is a stop loss, and TP is 1.3300. This is a small typo here. So basically, it's, of course, stop loss is 1.3410. Let's see now how the chart looks like. So the GBP dollar, well, you can see also here the GBP dollar is, well, it's a technical uptrend. We had some breakout to the upsides, then retest of these Camarilla levels, but still, you see, this is uptrend. It has a small zigzag here. It's above weekly H3. The slope is neutral, because now it's a bit rangy day today, but the slope is negative. The slope is neutral, but again, I think that the pound dollar can be bought on dips and also sold on rallies. Primarily, I would look to buy on the dip around 32.10. So it should drop more in order for me to buy it. 32.10 comes exactly at this spot. Okay, and you can see if it gets there, it will be in a small confluence also with this breakout. This basically is a breakout pattern. It looks like a, well, this looks basically like a pennant, okay, but it doesn't have a vortex here. You see, so we say it's a pennant, a running pennant pattern, because it doesn't have a vortex. It doesn't have an end here. So it could test this region here. It's also ATR low, and if you add Fibonacci pivot here, or Fibonacci retracement tool, you will see it's 61.8. Ilya is asking, what is this EMA? As I explained, Ilya, this red EMA, it's not EMA, it's SMA. It's simple moving average, and it's 50. Okay, T89 this is 89 moving average EMA, and this is 50 SMA. I'm only watching the slope of this SMA, and the slope actually tells me also, in addition to in correlation to Camarilla pivots and the price ratio to Camarilla pivots and general pattern, I can assume whether the interim trend is up or down. Now we see that the trend was down. Now the pattern is consolidating. The pair is consolidating. It's in a slight uptrend. You see the slope was slightly positive. It's neutral now. And also you can see a form of higher highs and lower highs. So it's uptrend, right? Slope. Ilya is asking, what is the slope? The slope is the angle. This is positive slope, or the positive angle. So when SMA 50 is positive, we assume that the price is in uptrend. When the slope of the SMA, or the angle of the SMA, is negative, we say that the pair is in downtrend. It's general how I do it also. It's a general usage of the SMA 50 on 4-hour time frame. It's my favorite time frame for assessing general trend. So yes, you can actually also use it, because SMA is much more, for me, it's much more clearer than the EMA. I tested the EMA angles and I don't like it. So the only valid angle indicator for me is the SMA, or the simple moving average. And one of the reasons why, because a lot of professional traders, guys, watch the SMA slope, either positive or negative. So yes, I'm also watching what other professional traders do. So yeah, it's pretty much the reason why I prefer to watch the angle of SMA, not the angle of EMA. And you can always see that the SMA reacts first before the EMA. Let's just use this example. You see how the slope turned downward. So for me, I would say that this was the start of downtrend here, when this trend line, or basically when this double bottom was broken and trend line, you see it actually it reacted much faster than this EMA that was bit neutral until this point. So the slope of the SMA, actually, I like it more than the EMA. But nevertheless, now obviously the pair is in a consolidation phase. It's in no man's territory. So we want to see either, guys, either sell or buy. We cannot go with buy or sell at this point. I would wait for the price to reach the POC zone. Then I would say go long or go short. This is what I see on the pound dollar. Sorin, yes, the SMA also reacts faster because 50 is less than 89, but it's much more. It doesn't have that smoothed into it, the smoothed factor into it, and I don't like how EMA shows the angle. So once more, I'm not watching any crossovers. I'm not interested in any crossovers. For me, that is totally fake. So there are no crossovers. The only thing that I'm paying attention to is the slope, guys. The slope, the angle. Okay, that is called the angle. The angle is, for me, what I really like to see. Okay, one more thing now. If anything, guys, is not clear, yes, I will definitely explain once more DMAs. Why EMA, not SMA? Guys, why? Sorry, vice versa. Again, I'm not interested in watching the EMA angle, because what I know of and what I have studied, for a previous 6-7 months is that the SMA angle for me it's much better, at least according to my Camarilla MACD. I don't say that it's not good for other methods, but for Camarilla MACD for me it's much better. Really, it's much better for Camarilla MACD. Maybe for other methods you can use EMA angles, but for me I wouldn't really say so. Uh, okay, let's see next pair. It's Australian dollar. Australian dollar is ranging. It's a sell position 78.10, 77.60 stop, TP 79.30, buy position 79.30, stop 79.60. Sorry, this is typo. It's actually I will correct it. This is buy, this is sell. Okay. And finally, TPs are 79.30 and 78.30. I will just correct this typo. Then I will show you the screen. The reasons for the typos are because I'm really doing real-time analysis, and I want to finish the analysis before I actually start showing you these setups. So that is my reason why. That is the reason why I see a lot of typos also on my slides. But it's obvious, guys. This is obvious. This is buy position. This is sell position. If you see some typo that is not very logical, well, you can assume that is only a typo, nothing more than that. Yes, I will show every setup a little bit later. Before I do that, let's see the Australian dollar. Okay, the Australian dollar. Now you see, guys, why I don't like DMA. This is clear slope. The slope of this SMA is much better, and you see I actually changed this to 50 exponential. You see the reason now. This is totally fake. This is totally fake from the exponential moving average. You see it showed positive slope while actually SMAs showed negative slope. Well, as I say, at least to my Camarilla MACD, the slope of SMA is much more valid than EMA. I will. Okay, this is exponential now. Okay. Now, yeah, I was just showing you this. You don't need to pay attention specifically to this. It just shows on template. We can now remove it. If you are confused, we can easily remove this MA because I already know, even without looking at the MA, the SMA, I know what the trend is, of course. So for Australian dollar, it's in ranging mode. Now, guys, here we have a bullish flag. But you see, the bullish flag can also be a fake out. And this is a fake out. This is clear flag. This is the pole. And because of Camarillas, this is resistance, guys, here. Of course, the price will drop. It's not like the Australian dollar is fast mover. So because of that, it doesn't move very fast to the upside or downside. But once it hits resistance, it usually turns. That is good. That is one of the good things when you trade slow moving pairs. So now for me, a buy position is 78.10. We can move on to 1 hour time frame. 78.10 is a buy position. This is you see a bit of confluence with WL4. Also, don't forget that pay attention to this level because it's also the POC zone. So please pay attention to 78.45 to 78.35 because the pair can get to this level and give you a scalping setup. It can go up also from this level. So please pay attention to this level too. It could go up from this level. It's dropping now, you see. And I think around 78, 20, 10 to possibly 35 here, it will also go up. So this is the zone, the first zone. This is actually the zone that I gave you. Slightly more of a pullback, and then I think it can go up. Sell position 79.30. It's a big confluence. Daily H4, weekly H3. Weekly H3 has not been tested yet. So I think that 79.30 and this is basically confluence can give you a short setup. Okay, so yeah, pay attention to it, please. Now, next one is Australian dollar CAD. Sorry, dollar CAD. Dollar CAD. As I said, I'm already in a sell trade, guys. I did the analysis today on dollar CAD, so it will be either a loss or well, it will be either a loss or a win for me. This is actually my analysis today. Let me show you. And we have a dollar CAD dark cloud cover. And still, I'm in a trade from 25.30. It came to the POC very fast, so I waited for the top of the POC zone. Yes, this is, guys, one of the tips and tricks for trading these POC zones. Okay, I will remove this indicator. Just I don't want to confuse you with this. We'll keep this chart as clean as possible. So once you see that the price is moving fast into the POC zone, like this Marubozu candle, usually most of the time the price will get into the top of the trading range. So at the top of the POC. So that is why I actually waited for this to happen. And of course, I used and I entered also on my live account. I entered a trade, and it's pretty much clear that this POC zone is rejecting the price at this point. And well, yeah, I mean, this is the MT5 platform also. Yeah, you see, it generally uptrend, but we also have here, we also have a shooting star rejection from the Admiral R1. I'm using these pivot points until I make my camera also for the MT5. But of course, I did the analysis also on MT4. So you can see here, nice consolidation. Now the price is going down. I'm totally counter trend this trade. So as I say, it's maybe riskier because it's counter trend, but well, it's usually well worth trading if risk to reward is good. So let's see what will happen with dollar CAD. But it's actually now in the POC zone. So let's see, it's a sell position. Keeping stop loss now around 26 and 24.40 could be the TP, but of course I'm always watching the price movement, and because volatility is not the same as it was 5-10 years ago, we cannot make it set and forget trade. We need to watch the movement and usually protect our trade by using profit stops. And finally, the pound yen. Pound yen is in ranging mode. 148.70 is the entry, around 148.70. Stop is 149.20. TP is 147.25. Alternative buy 147.25. Stop 146.70. TP 149.20. And this is the pound yen. Basically, the pound yen is also well. Yeah, on this demo account, I have a sell trade. Already I'm in a trade, guys, because, well, what I like to see is perfectly moving price action. Uh, and for me, this is a perfect moving price action in a negative territory. The only thing that I don't like, guys, is this range bound market. Because for pound yen, 80 pips, guys, is range bound market. The price is going my way, yes, but it's range bound market, guys. So I think that if this wants to go down, it might retest this range again and then drop. But definitely what I see here is downward movement here. You see the price is going down. Okay, you can place trend lines here. It's going down, down. Okay, and you see it's making a U-turn from daily H3 sorry, from weekly H1, and it came almost to daily H3. Now it's touching daily L3. It means that the pair is ranging. Whenever you see the price between daily H3 and daily L3, it means it's ranging in intraday time frame. Although it's pretty much bearish at this point, but as I say, this can also spike to the upside because pound yen is very, very volatile. But I trade what I see. I cannot go against myself. So let's wait and see what will actually happen with this nice little trade. Well, and my favorite pound yen pair. But well, wait and see. I will roll slides again, guys. Then you can ask questions. We don't have much time. I will try to be very fast with the answers. I know that Angel is asking about gold. I will actually use also. I will use my template for Camarilla MACD for gold. So just be patient. Give me 2 or 3 minutes. I will roll the slides. Okay, euro dollar. Then we have pound dollar. Sorry, guys. Yeah, it seems that I lost my sound. Thank you, guys. Now the sound should be okay. Yeah, the sound should be okay now. Okay. Mhm. Thank you for your confirmation. So, once more, uh, this is the gold chart, and definitely you can see that gold is in uptrend. Okay. And on 1 hour time frame, I would like to see a little bit bigger pullback. Now, if you want to be patient and wait, it should come probably to test this weekly L1 again, and it could go up. But the better confluence is found here. You see, first of all, we have order block, small order block. It's not very strong, but it's in a confluence with weekly L3 and EMA 89, and it's also 61.8. So for me, this is long, okay? But you need to be patient and wait for a price to pull back. So pay attention to this level first, 1300.95, then 1225.7475, because this is a volatility candle, high volatility candle, and it didn't make a pullback towards lower levels. So this is at this point where I see the biggest confluence. But gold is definitely in uptrend. If you want to go with the counter trend trade, then you need to see a divergence first. Now we don't have any divergence between MACD and the gold. Here is WH1, but you see there is still room to projection. So what I would say is wait for divergence, then add a trend line. If you see a divergence and trend line break, that can be a counter trend entry on gold. That means you can trade it to the south side. Okay, Daniel is asking for New Zealand dollar. New Zealand dollar here. New Zealand dollar. A big downtrend. it's a little bit over the range, so you might see counter trend entry now. This is a steep trend line, but you see the price is making a counter trend move. This will be probably tested. If it goes more to the upside, watch for this order block. This is for order block. And yeah, sorry, this is CAD yen. It doesn't matter. I'm showing you CAD yen now. Then I will go to New Zealand dollar. So this is the order block. If it drops more, then expect a breakout here to WL5. But if it goes up, this could be actually where the price will reject. Yeah, this is CAD yen, guys. Wait, I will show New Zealand dollar. CAD yen, I also had question about CAD yen, so I move it instinctively. So this is the level to watch for possible shorts on CAD yen. So watch this level for possible shorts. Now New Zealand dollar, strong uptrend. What I would say here, this is possible M pattern in shaping up. If this breaks this bottom here, it should go down. But it needs to break this bottom. This is the bottom. This is 0.2 of M. 1, 2, 3. If it breaks down, then it will probably test daily L3 and 61.8. Now it could go more to the upside because if it's in a strong trend, what I usually say, it rejects 23.6. And now at this point, you see that the trend is strong, uptrend is strong, and it rejects indeed 23.6. So it can go more to the upside. This is the final projection. But I would say go long on dips. That is what I would say here. And GBP Swissy. Okay, then we can call it a day. GBP Swissy. Well, bit of range in price action. This can be some sort of head and shoulders shaping up. It's not very clear. But for me, if this breaks, if the pair breaks the low here, it should test this ATR projection low here or even this level WL3. It's currently going down. I hope, guys, that you enjoyed. I tried to be very quick. I gave you setups. Let's see. I hope that we will make some pips now. We still have time for one more question before I actually call it a day. Dollar yen. Okay. Yeah, finally. Yeah, this is final question for today. Dollar yen. You see dollar yen following also pound yen movement and generally yen strength. Okay, you see a down move here. This is clear POC zone without adding Fibonacci. This is very clear. You have order block here, EMA 89, WH3. This is the zone to go possibly short. Thank you, guys. I wish you a great trading week. I hope that we will make money, guys. And well, please don't forget to sign up for my real-time trading idea on Thursday. You will see the pair which I will choose for you with clear entry, stop, how to manage your target, and so on. As always, very clear and very, very, very transparent. Thank you, guys. See you on Wednesday, live trading session. See you, guys. Trade safe.